The Toronto real estate market is falling apart, but here in Vancouver, we are on firmer ground for now. I'm going to be jumping into some data, some pretty scary data actually, to show you how much housing starts are drying up like crazy and that we are set for a pretty big supply shortage in the next couple years. In the meantime, you've probably heard what's been going on back east in Toronto, especially in their condo market. There's been similar things here in Vancouver, especially in the pre-construction market and condos that have completed in the last couple years where people are in a lot of trouble with their assets. But that is set to change, and I'm going to show you exactly why with the data upcoming. I'm going to be also referencing this Financial Post article that was written here in March 11th of 2025 to show you exactly what is going on between these two markets so that you can make the best decision whether you're looking back east or you're looking here in Vancouver. So as we get into the article, you can see here Vancouver's housing market seen on firmer footing than Toronto's heading into tariff turbulence. Sales in Canada's largest city plunge in biggest drop since early days of pandemic. We know from the data that there's been a lot of housing completions in the last 24 months and that there's been a ton of product that have come to market. So for example, this coming year in Toronto, there's over 40,000 units that are coming to the marketplace. And with these interest rates that have gone up and people who've leveraged themselves, it's made it very difficult for some of these people to be able to complete. So there's been a lot of fire sales out east, and similarly here in Vancouver, a lot of people who bought pre-construction a couple years ago and they've completed recently or going to complete, they just can't make things work, especially with these interest rates that have gone up, and they've had hard decisions to make, selling properties at well below market value just to get themselves out of a bad situation. There was a specific building that I sold just recently in Vancouver. The building was just a couple years old. It was a luxury build, a fantastic building, but there was a couple fire sales in that building and it just dropped the price. In that particular portion of the downtown market, similar comparable units were selling about 96% of assessment, but because there were a ton of fire sales, because people were in financial hardship, this particular building was selling at 76% of assessed value, so 20% less than the open market. So there were some magnificent deals in that specific building. If you're wanting more information on that, shoot me a message. You can book a discovery call in the description below. But this is some of the problems that we're seeing. It's to a much larger extent back east in Toronto, but here in Vancouver, there has been some safeguards in place that have helped keep property values for the most part stagnant instead of seeing some of these larger drops that we've seen in Toronto. As we go down into the article, right here it says Canada's most expensive housing markets took a beating when interest rates soared and now they face a new challenge. High housing prices in both cities made them vulnerable when the Bank of Canada raised interest rates, but while Toronto's woes are well known, Vancouver has flown a bit under the radar, said Rishi Sondhi, an economist from Toronto Dominion Bank. So why has he said that? The Greater Vancouver area, while weaker than most Canadian markets, has held up better than the Toronto region, he said. Over the past 3 months, home sales are up 21% from the year before, while in Toronto they were up 8%. While average and benchmark Vancouver prices are down 6% and 4% respectively from pandemic peaks, in Toronto they have fallen 15%. Condos are Toronto's weak spot. They supply glut and weak demand. They have put pressure on sales, and prices have been exacerbated by declining population growth and the brewing tariff war, said Sondhi. Condo sales in Toronto were down 12% in January from a year ago, while in Vancouver they climbed 14%. The ratio of condo sales to active listings in the GTA is about 60% below its long-term average. In Vancouver, it's about half that, he said. One reason for Vancouver's resilience is that affordability did not deteriorate as much during the pandemic as in Toronto, where home prices skyrocketed when interest rates hit bottom. Just before COVID-19 in 2018-2019, the BC government introduced measures to cool housing, including hikes to the foreign buyer tax rate and land transfer and property taxes. As a result, prices were already declining at the end of 2019, said Sondhi. So I agree with his prognostication here. We know that in Vancouver, there's been a lot of cooling measures here, and that we've been at a flat line in terms of housing pricing for a number of years now. His argument is that in the Toronto market, there was a blast off in terms of appreciation just after the pandemic. And then when these interest rates came in, because those limits were so high, they started to really drop in price point because they couldn't afford the benchmark pricing any longer. The barrier of entry is the argument here. With Vancouver having a lower barrier of entry to pricing compared to Toronto's that was higher, the demand could not keep up for it. So when those sales regressed, pricing also regressed, but because they were at a much higher rate, the fall from the peak has been much more severe than it has been in Vancouver. And I think that's one thing that has been a benefit to the Vancouver market, despite COVID, despite inflation, despite these high interest rates, because our values have stayed flatlined for a number of years, it's really insulated our market that we haven't seen this bubble pop like so many people thought before. With this trade war that is ongoing now in the States, that is another reason why the Toronto market is not doing as well as the Vancouver market. I've highlighted it in previous videos that you can check out, that in terms of major metropolitan cities here in Canada, Vancouver is not nearly affected in comparison to many of these major cities across Canada. We're number 31 or 32 out of 41 cities affected by the tariffs. We're back east. That is a completely different story. I've been working with a Toronto buyer, and we just got on a call last week to check in, and there is a job loss because of these tariffs. Now they're going to have to put their home purchase plans in Vancouver on hold because of the instability of that market. So that is something else that's going to have an issue here when it comes to the two markets, especially during this trade war. Obviously, this is not great news, especially if you're a recent condo owner or someone who's going to be completing on a condo sometime soon. If they don't appraise out, or you're losing a lot of value right off the top, that is obviously not something that you're wanting. Everyone thought in Toronto and Vancouver that pricing was going to continue to go on this massive bull run, but it has not been the case. Developers here in Vancouver, we're starting to see signs of this as well. There was a project downtown. Phase 1 of that project was selling around $3,000 a foot, and now that they're selling phase 2, it's almost half of what they're selling phase 1 for. So could you imagine if you were a buyer in that first phase? That means that you may not even be able to appraise out. If you can't appraise out on your property and you can't get a mortgage for it, you still have an obligation to pay for that unit. So it can create a lot of mess. So yes, there is a lot of pain in the marketplace. I think that pain is going to be there for quite some time, but it's not going to last forever. And I'm going to show you exactly some of this scary data when it comes to housing starts, or the lack of these housing starts, both in the Toronto and the Vancouver market. As we get into the numbers here, this is going to show you some pretty sobering data points here. This is a subscription that I subscribe to from Edge Analytics. And we start off here, new condo sales hit new lows. New condo sales were down 84% year over year in October and are down 66% so far this year. That trend points to a sharp decline in condo starts right through next year and will ultimately set the stage for a serious supply shortage likely in 2027 or 2028. The first charts that I'm going to bring up here are specifically here in Toronto, and you can see here the end of 2024. Like I said, this is the year-end report in December, how low these sales have dropped. We have not seen anything in Toronto for the last 20 years, not even this close. This is half of the lowest amount of sales that we've seen in the last 20 years. It is quite sobering when you look at that. So there is, like I said, some current pain and some future pain that is going to happen, but there is some hope here, and it is with these housing starts. So depending on which end of the spectrum you're at, if you're a seller or buyer, as a seller, or as a future seller, or someone who's purchased and wanting to hold, these are some signs that are going to be some good news for you. So these are the Toronto housing starts here. And you can see here, these condo starts, boom, flatline, dropping down to levels that we haven't seen in about 5 years. Even the rental market is dropping. Single family has had a huge drop over the last, couple decades. And then Toronto housing starts on a 12-month rolling average, there's been a huge drop off here, looking at this gray line in a little bit further detail here. So this is not what we're wanting to see. Obviously, when there's going to be a drop in housing starts, everything gets pushed back, because with these condos, they can take 3 to 6 years depending when they rezone it, put their applications in, and by the time they actually get people moving in, depending on the size of the project, it is years away. So you don't want to have this lag. You want things to be generally going up so that you can continue to move forward with the housing and to get that supply on the market. Right here it says there are 102,000 dwelling units still in the construction pipeline across the GTA. If starts continue to fall and completions accelerate, this number will begin to decline, which has implications for construction employment across the province. Of those 102,000, nearly 75% are condos, which means the condo market should remain quite well supplied through 2025 and likely into 26. Beyond that is when things get potentially interesting. When we look at dwelling units under construction in Toronto, we can see that we've hit those peak construction levels. Likely this is around 22, 23. For the last couple of years, we have been on a pretty steep decline, a decline that we haven't seen in quite some time. The last one was about in 2015. So as we move forward, there's another chart that was very interesting, and they highlighted it, in 2025, they're going to see more supply of condos. There's about just over 40,000 condo units coming to the GTA area this year. But if you fast forward to 2028, it's going to be less than 5,000 units coming to market. So that's just showing you, and that's why I love these data points, because it can really help us prognosticate where the future market's going to, because it's all based on unit. It's supply and demand. It's so simple. If we're tracking permits, the permits are at 40-year lows. If we're tracking construction, housing starts, and they're starting to drop, we know that there's going to be a pinch point down the road. As we get into the numbers here, it's painting a very similar picture as Toronto. Both these markets act very similar, but luckily for us out west here, Vancouver, our market is doing a lot better than the Toronto market. So housing starts across Vancouver fell 13% year over year last October, including a 36% decline in the single family segment. We know with all these land use changes from the province, the single family segment is getting completely wiped out. They're ripping them down. They're putting up duplexes, triplexes, multiplexes, condos. So if you can hold onto your detached property, I mean, that value is going to continue to move up and up because they're just not making anything. Right here, it says the trend in single family starts is downright depressing and reinforces my view that we are facing a significant shortage in coming years. Plug in whatever annual growth estimate you want for Vancouver over the next couple of years. I'm confident that 2,300 single family homes started in the past year are not enough by a long shot. We risk being dramatically undersupplied for single family once demand starts to normalize, which it eventually will. And with these housing starts, with these charts up here, you can see that the condo market here with housing starts has just dropped significantly, just like in Toronto. And the single family segment has been on a downturn for the last 8 years or so. Vancouver housing starts on a 12-month rolling average. You can see the dramatic drop off here over the last couple of years as well. So this is not painting a good picture. As we move forward down the article here, you follows up. Remember, the most money is made and lost when the masses forget that cyclical things are cyclical. Demand will not remain this low forever. And as I've been preaching, so many agents have been preaching this to your clients. 2024, amazing time to buy. 2025, amazing time to buy. It is soft, especially in the detached market. And I've highlighted this in a previous video of mine. Vancouver's west side, so soft. Buyer market conditions. Vancouver's east side detached, soft. When you see these numbers of these housing starts dropping, single family dropping, permits not being issued, there's going to be a supply crunch, so you need to get in on this land. This chart here is the Vancouver single family housing start, and you can see it's just been dropped off a cliff the last couple of years, and we haven't seen data this low in over 35 years. This chart goes back to 1990. We haven't seen anything like it. Down below, there are still over 65,000 dwellings in the construction pipeline in Vancouver, but about 95% of those are condos and purpose-built rentals, 22,000. I've highlighted this as well. There's been such a focus on these purpose-built rentals by the province that all these other segments are being forgotten. Permits aren't being issued, the starts aren't happening, and there's going to be a supply crunch, and you can see that here. Vancouver total dwellings under construction currently has peaked out here. This looks like to be in like 2023, and there hasn't been any gains here. And then when we look at Vancouver dwellings under construction by segment, you can see that the single family dwelling has been essentially a flat line for the last 35 years. There's been a huge push here with these purpose-built rentals, and then condos here are petering out. So what does this all mean? We know that in 2025, for the remainder of the year, it's going to be soft. We have these tariff imbalances. We have the Bank of Canada figuring out what they're wanting to do. We have a federal election coming up. So I don't think either way, plus or minus, that's how I feel like the market is going to run. But if you are wanting to get into the market, this is a good time to get in. It's soft, and we can see with this data that's produced today, there is going to be a choke point in the next couple of years. So obviously, the sooner you can get into something, especially when the market's soft, these cycles are cyclical. It's not going to be like this forever. Especially if you're in the Toronto market, I'd be looking at picking up condos for sure and just holding on those. You can get some great value buys, and you can already see with this data the type of inventory crunch we're going to see. So if you need referral partners back in Toronto, I have many friends that are working that area that are very, very well qualified to help you. You can book a discovery call. All my information's in the description below. I can hook you up with a referral. And if you're looking in Vancouver and you want to talk a little bit further about the market, make sure you book that discovery call as well. My name's Kyle Mark, your Vancouver realtor, and whether you're looking to buy, sell, invest, or relocate to my beautiful city of Vancouver, make sure you get in touch with me, and I'll see you on the next one.